Hello guys, good evening. Welcome. My name is Adam from Trade with Precision, and I recognize a couple of regulars there. Thank you very much. Diana, good to see you, and several of the others. So I assume the sound is good. I want to make that assumption because I have green lights on my side and I'm pretty sure you can hear me. If there are any issues, I will find out quickly as well. So welcome everyone. If this is your first webinar at all or to do with trading or potentially here with IC Markets or myself, a big warm welcome to all of you. The topic today is the indecisive indices. What can we expect in the coming months? Now, some of you who have joined me in previous webinars, we've done quite a bit of analysis already, and I would like to recap on that and also have a look at anything else that you want me to have a look at while we, because I'm pretty sure we can have a bit of time to do that. I'm going to give you a moment to digest the risk disclaimer. For those of you who don't know me, I'm based in the city of London. I trade my own capital. I'm a trend-based trader, which really is, the point of that is to say that I focus on markets where there's a clear trend, and I trade all markets. So I'm looking at indices, currencies, and commodities, and what else? Multiple time frames. So actually, I've been doing a lot more day trading in the last couple of years. Yeah, you can still access. So I did a live trading on a live account session on Monday morning, and I know that some people wanted to see that. I know some of you missed it. You know that you can still access it and have a look at it. If that's of any use to you, Diana, you can still do that. So you can access it, I think, and have a look at live trading and kind of how I go about doing it. And it was fine. It was great. I actually enjoyed it. I really thoroughly enjoyed it. So on the agenda this evening, we're going to be talking about chart analysis, obviously, of multiple assets. That's really sort of asset classes. You've got to think of commodities as one, indices as another, currencies as a third option, for example. We're going to have a look at the forecast of the favorite FANG stocks. This is actually updated now. I want to include Microsoft in it. And the NASDAQ. And so the FANG stocks, for those of you who may not be familiar, are generally the most heavily weighted constituents of the NASDAQ, which is usually Facebook, which is now Meta, Apple, Amazon, Netflix, and Google. And I think we should include Microsoft in that as well. But we'll just go with that for now. And then we're going to do chart analysis on multiple timeframes, days, weeks, and months. So let's just go across now. So this is what I did today. So usually in the past, you may or may not know, I have been using the CTrader platform, but for you guys today, because some of you are using the MT5 platform, I've switched to the MT5. So if you have an objection to me using MT5, just let me know, and I'll go to the CTrader. But from my survey that I did recently, most people are using MT5, and therefore you're okay with me using it. And so we'll start off with a couple of things here, okay? I'm going to start off, first of all, I want to have a look at, let's look at euro dollar. So let's bring on euro dollar. And there's a couple of other scripts that I've pointed out, I've mentioned to some of you in the past, which are quite powerful. One of them that I quite like, which automatically draws support resistance levels and weights them by color, is the fractal support resistance. You just Google that, you can get access to it, it's free, it's a great little tool. And it's nice, it'll automatically detect major levels and it weights them by color. So generally, for example, let's just hide these lines here, for example, just hide them. You'll have, as it goes to red, it's a weekly one. If we go towards green, I think it's monthly. There's a couple of these other ones here. We'll go down to, say, for example, daily. And if I change time frames, go down to the 1 hour, you can see that also there's a couple here at different time frames. So the other thing that you might not know, and I discovered it, and I don't know, it's really not publicized anyway. If I hit my space bar, I want you to see here at the bottom left-hand side, I'm going to hit my space bar, which allows me to type in a symbol or period. But if I type in, for example, 240, that's 240 minutes. If I hit that, that just changes my time frame to the 4 hour. So if you want to do that, that's pretty cool. And you can type in your symbol as well. So the next thing I'm going to do is I've just added on a simple 50 moving average, 20 and 10 simple moving averages. If you like, they can be exponential. They don't have to be simple, they can be exponential. The difference between where they are located is not significant enough in my experience that it changes my overall picture. Remember, what I'm really paying attention to are the candlesticks. That's really what I'm going to be paying attention to, the most attention to. And the moving averages are an additional or secondary analysis to that. Then I've thrown on a MACD. I've just hidden the histogram and the RSI default settings. So they are effectively, the settings are straight out of the box. They are default settings. And these I'm really going to use as a double confirmation of momentum. Okay, and that's relevant to tonight, for example, when we go through to the indices. Now, the next thing that might be of interest to you, if you go up here to the options, to give you a bit of technical advice, or not financial markets advice, technical advice with regards to optimizing the performance of this, is you'll notice that if you go to the charts tab on the options, you can hit Control-O, it'll bring up this. You'll see here the maximum bars in chart. Now, if I drop this number down to 1,000, 5,000, that usually will reduce the amount of bandwidth that my platform is using. And also the more of these items I have in the left-hand menu, they are streaming the data directly. And so that's consuming bandwidth and CPU power as well. So the more things listed on the left-hand side, I've got, I've thrown in a few stocks for the purposes of today, but I have my default list here, which includes about 27 different currency pairs, the major indices, and of course the major commodities here, both in terms of, where's my crude oils? I'll have a look at those in a moment, plus my cryptos, I want to have a look at those, and then some equities. This is, and so we can have a look at how some of these are performing. So let's just see what Abbott does, for example, and then I've got a position size calculator, just in case any of you ask. I'm just going to get rid of this for now. I don't need it. So just go to my indicator list and just remove that. Now, what I'd like to do, let's just have a look at Disney. How's Disney looking? Let's go to the daily. You can just see, for example, how these equities are looking, and we can add those in. So how do I go about doing it? I don't need this for now. I can just get rid of that window, and I'm going to go through and add a few items. So I'm going to right click, go to the symbols, go to my commodities. Where are my energies? There we go. So I've got energies, I've got spot. I'm going to use that for now. I'm going to use Brent. I'm not going to worry about natural gas for today, Brent and crude oil, and then I'm going to go across, have a look at the softs. So these are pretty cool, but these are contracts, and so the problem with them is it's limited amount of data. It's fine if I really want to trade it, but it's not ideal. And then I've got gold. So let's just have a look at some of these. For example, wheat. We can have a look at wheat for the purposes of analyzing inflation. So this is not meant to be a highbrow discussion. It's not meant to be a highbrow. We're smoking cigars in some kind of exclusive lounge talking about economics and politics. That's not at all what trading for a living is about. That's just not what it's about. Trading for a living, ladies and gentlemen, is about finding patterns that occur in the markets on a frequent basis, trading them because they have a very high probability of giving us 2 or 3 times our risk and generating an actual income from it. It's not even the same as investing. And so this is what I'm doing today. This is what you can witness if you look at the live trading that I do. So I'm not here I can infer things from what the price action is telling me, but I'm not here to draw economic, conclusions, analysis, and so on and so forth. And it's much more my performance, the predictability, the reliability of my analysis is much sharper on a shorter term than on the much longer term. I want to just move these up to here, so I'll move that up to crude oils above West Texas and Brent. Brent is just UK oil. All of this you can learn. If you're brand new to this, all of this is learnable. My previous life was in the movie business. I was doing those visual effects and animation and doing all that kind of compositing and kind of the Toy Story, Pixar, and kind of visual effects stuff. That's what I used to do. So I've just transferred that ability to go onto technical software across to here, and it's a learnable skill. So it's just confidence is probably the biggest thing I have to build up. And let's look at wheat if we bring that up. So I've got all my commodities together. I want to have a look at those, and let's start off with I'm just trying to decide which way I want to do this. All right, so one of the things that we need to understand, it's important, is understanding, especially if we go to say the monthly chart for the euro dollar, we need to appreciate where the euro dollar is at the moment. Okay, and I don't necessarily need this data window, but I'll leave it there for now. I've just included this on the right-hand side so that I can get detailed price data, but I feel like it's not really adding too much value, so I'm just going to get rid of that. It's a bit distracting. All right, let's have a look here. So we are, ladies and gentlemen, we are at a significant point period in time that we've been in, call it from around about 2015, January 2015, once we started getting in here. In fact, actually, it's more accurate to say that we got in here at, I'll just highlight this as well, so very nice area, and I just want to change the color. I'm going to change the color to something that we can all recognize, so I can mark these areas. And so this is a very significant level. This is the 1.2 level, and there's also 1.3 level here. The dollar broke through. This is relevant, by the way, when we get across to the indices. You'll see why. And so this is a significant level. We have, we're also are bound at the bottom. If we kind of add these levels here, we're bound at the bottom. So we're effectively range bound at this point in time. And so the dollar has been strengthening for various reasons. It's been strengthening. One of the biggest contributors towards a stronger currency, any stronger currency, is a rate hike. It's normal, by the way, to have a rate hike when we have inflation. So in other words, inflation is part of the cycle. It's the winter that follows the summer, that follows the spring. And so when a market has had a lot of growth and everything starts, people start making a bit more money, but then they start to spend more, and then everything gets very expensive. Usually what happens is the central bank's job is to then increase the rate hikes to calm down the spending. Now, here's the thing. You could have inflation triggered as a result of everybody making money and life is good. That can happen. But you can also have inflation triggered by a lack of supply, which is really what's happening at the moment. So I just want to kind of color this so that we've got a bit of a color attached to it. But you can also have it kind of triggered as a result of a lack of supply and a war breaking out, which is one of the key things. So I wanted to mention this because we've had a stronger dollar actually going back as far as, where are we here? So sort of going back to even, this is going back a year ago. That's right. So a year ago, we had this kind of starting to strengthen at the top of the range, and it's range bound. So it's very important for me, at any rate, to not assume that, we might have had a dollar start to strengthen simply because of the cycles it's going through here. But in the recent, let's say last 6 or 7 months, that's been as a result of, it's been also as a result of inflation. So inflation, one of the two kind of big contributors to inflation currently is Russia's invasion of Ukraine, which has placed pressure on, and Putin is also limiting supply of natural gases and energy to other parts of the world in an attempt to intimidate other countries. Now, I think in the past that might have worked. I think right now, basically, my intuition is saying everybody is actually just fed up with Putin, just tired of it. And actually what he doesn't realize is now he's poking a sleeping bear. He's getting to a point where his stuff isn't going to be tolerated anymore. But the point is that is one of the big contributors. Not only that, but this pressure on Ukraine as a natural supplier or as a supplier of natural resources and farming goods and all kinds of other things, wheats, for example, has added a bit of pressure there. So we've got those are, and COVID as a result of supply chain issues being couple of other things, people finding better jobs, people also deciding they don't really want to work in a bar anymore, they don't want to work behind a bar, they don't want to be delivery people anymore, they're starting to go for higher paying jobs, and also other obvious issues where people can't really necessarily work because of the difficulties with regards to safety, health and safety with COVID, has resulted basically in supply chain issues, which has added strain to this. So if these two items are resolved, if the war with Ukraine is ultimately ended, ideally in a situation where Putin is brought, to, I guess, under the arm of the law and is obviously charged with human rights violations and so on and so forth. And then we also have supply chain issues, feel relief from post-COVID. So ideally, we're starting to see that's happen. Then we'll get a sense of what's left over. Where are the supply issues as well? So they have been around since COVID, and we need to understand that we're just feeling an additional tightening of that. So we have to kind of take that into account. And what's happened as a result of that is that the banks have started, because the inflation's increased, the banks have started to see inflation, and their normal, natural instinct is to start to increase the rate hikes. This is very normal. It happens every time the market gets too hot, and has always been the case going back 150 years ago. So what I mean by that is it's always annoying, because it feels as though there's been a party and things are finally getting good. Everyone's starting to have a slightly better time, and now they're shutting it down. That's sort of how it feels. But actually, unfortunately, it is what we have to do. And the consequence of that is, some people are possibly financially exposed, but the cost of these things, it cannot be avoided. The alternative is, if they don't increase the rate hikes, the prices just keep going up, and the consequence is exactly the same. So they need to do this to cool it down. The question we're really here to do tonight is to have a look at the markets to see what would the markets look like, how long will it last, and how will we be able to identify that it's coming to an end. So I talk about the US dollar because we need to understand that if the US dollar holds at this level, and possibly the pound or the euro start to push back, we could see the dollar start to weaken, possibly even back up to the middle, or possibly to the other way, across to the other side. And if we see a slightly weaker dollar, then we'll see some relief in addition to all the other things. Because as the dollar, what happens with currencies when you increase the rate, the currency gets stronger. It applies to the pound. Who's not in the UK? Give me some feedback here if you're not in the UK. But if you're in Europe, anywhere else in the world, you could be in Africa somewhere. If central banks, as soon as your central bank starts to increase those rate hikes, the currency actually starts to become, it gets stronger. Part of that is because big institutions like to borrow money at a low interest rate and then lend it out at a higher interest rate and then pocket the difference. So that creates a lot of movement in the currency markets, and it's very good for us. Okay, so we used to have incredibly nice trends that used to be very long sustained trends, and then it's been a bit wishy-washy since 2014, 2015. Okay, so I want to see changes in those. Let's just go ahead and I'm going to add another chart here. So we'll go to this one. This is my default setup. If you save a template, if anyone cares about this, if you save a template as default, you name it that, then usually every chart you create will just look like you need it to look. So I have mine set up like this without the grid as a default thing. You can just create that. And then I'm just going to quickly add in my template here with the support resistance levels coming in. So this is my euro yen, and I wanted you to also just see how that monthly chart looks. It's just loading the data. So that I can show you how this kind of looked. Okay, so this is fresh installed on my thing today. So we used to have these really, really great trends, and I'm just showing you this because you need to understand that every currency will strengthen as we get rate hikes. We're getting them in the UK, we got them out of the US, and so you need to understand that even though the dollar will be strengthening, if GBP, if the Royal Bank, or at least the bank, at least within the UK, starts to do it, in Europe starts to do it, we'll potentially see the pound start to strengthen and the dollar start to weaken. Okay, it depends on really how strong that dollar is going to be, because if it's determined, it'll just keep going that way. All I wanted you to see here, looking at euro yen, for example, is these long sustained trends that we've had in the past, and lately again not having so much when the yen pairs have started to move. Okay, so now that I've spoken about inflation, where the pressures are, I was even looking at a few other things here, so you can see sort of the US inflation in this area, and also kind of what are the big contributors to that. But we can see certain things are, oil and gas has been taking up about 80% of the cause of that, which impacts, by the way, not just our cars or vehicles that we're driving, but everything to the shops, meaning all the delivery trucks that deliver the foods to the shops. That adds to the cost of foods, because they transfer the cost of the delivery of the fuel prices onto the foods for the distribution, and so on and so forth. So it just goes up from that. And then in addition, we've got wheat and certain crops that are experiencing that. So this gives you an indication of specifically where those areas are, and also helps work out what we need to see a change in that. So then coming back to this, we've got these potential rate hikes in the US, but also what's happening is we saw this acceleration. Sort of the price action was kind of going sideways a bit. We saw acceleration, and now we're seeing it potentially starting to calm down. There's fears of a recession. We're going to have to see how that goes. Remember that obviously trading is recession proof, meaning we can just trade the markets whether there's a recession or not. As long as the markets are moving, that's what we're going to be looking for here. And so let's move across to the indices. Let's start off with the Dow, which is the oldest one, which was founded in 1896, I believe, something like that. And so let's get a good sense of, I'm sorry, I didn't realize, I made the error of thinking that the data would already be here, but let's see how that goes. Okay, and so what I would like you to just observe in this case is we could see that this is during COVID, we saw that big drop down, we recovered very quickly from that, and this is kind of the correction we've had. So we're still within the bigger move to the upside. We've got price coming down towards that 50 moving average. It kind of passed a chair, and that was a shock to the system. This is not a shock to the system. There have been fears of inflation for at least over a year, and this is really the market starting to implement its response to inflation. The other thing that happens, by the way, is that when we get stimulus cash and QE and we have low interest rates, the big institutions borrow hundreds of millions, if not billions, from central banks, and they put it into the markets. So if you're wondering how all these people are making money during COVID, when the rest of the market's kind of tanking, how is that possible? One of the big reasons is they just borrow money at a very low interest rate, stimulus cash, and put it in the markets. So if you get all these big institutions and millionaires and billionaires all putting money and buying stocks and stuff, the stock market goes up. And so they benefit from that because, of course, it's not their money, but they get to borrow it. So if I could borrow 200 million and throw it into the market and everybody else was doing that, we would see the stock market rise. Okay, what stops them from doing that ultimately is either when there's quantitative tightening, which is happening now, which is the opposite, which in many senses means, okay, look, we're going to start, either we're going to need that money back or we're going to start, the returns aren't going to be as good. And so those big institutions start to extricate themselves from those positions, they start to liquidate those positions, and we start to see a very natural correction. So in other words, it's rare not to have a response like this, a correction in the markets when rate hikes occur. It's rare. It almost always causes that correction. And so does it mean that the bull trend is over? No, we did need a correction. We've had an incredibly steep climb. We do need to have that correction. The question really is, first of all, does this mean that the market is safe and it will ultimately recover? Well, it's one of those things where the longer we're exposed to this, the more it triggers other things. It's like if you're driving in your car and there's a service light that comes on. So if you go and get it serviced, or if you go to the dentist, for example, every 6 months, there's less likely to be any issues with your teeth. But if you don't go, and eventually, the situation gets worse after repair one in your vehicle, if one thing starts to fall apart, it can put strain on other parts, and then other parts start to fall apart, and then you're in trouble. So that's really what they're trying to do now, is to find that balance between cooling the inflation and not triggering ripple effects of everything else. And that's definitely what everyone is wanting to do. But I have a feeling there's still going to be some knock-on effects. First of all, there's no doubt that part of the inflation we're experiencing is linked to corporate greed, price hikes as a result of people doing really well. And so we got price hikes not necessarily tied to supply demand issues or supply chain issues, but actually as a result of greed. Spending's going well, so the prices go up, and then it's got to a point where it's a little bit too much now. And even in the property markets, those are the cases. So the first level I'm really going to be looking for to see if price can find a bit of a floor is going to be around about the 2,800 level, beg your pardon, 27,000 level. And then the next level I'm going to be looking for here is going to be around about these areas here. So these are fair areas for price to potentially be able to find a bit of a floor. If we go to the weekly, what I'm going to be looking for here, it's going to take a while for price to change direction. So I'm just going to draw on the chart and see what we're looking for. When price turns around, okay, look, yes, here you've had a V-shaped recovery, what they call it that, or a big sharp climb which goes up. That's very rare. This is the least likely to occur. What we usually will see will be a drop and then a shift into an uptrend and so on. So we'll see these lower highs and lower lows, or in fact what we'll see, and this is probably the most realistic, is we will see price slow down. So let me redraw because it needs to make more sense. In the beginning, when the market panics, there's a little bit of a slow move, and then there's a little bit of an acceleration. The market drops aggressively here and here. Then usually it starts to slow down. So now all of a sudden the retracements get a little bit deeper, so the pullbacks are a bit deeper, and the next move down is not as far below this low, so it's usually a little bit shallower, and then we get some deeper pullbacks and some shallower pullbacks. And so the drops the market are doing is less and less and less. Okay, we are not there yet. We still need to see that. So the implication is, at this time, I doubt we'll get a big move up. It's possible, but it's very unlikely that we still need to see a few lower highs, or potentially at least something like this, where we need to see a shift in that. We need to see the speed of the market slowing down, and then we don't really have that. And then once we get to this point, and I actually made a list of it last time, there was like a 5-point list of things we need to see. But the first thing we'll need to see, first of all, is that the lows slow down. They're not as, so this low to this low is quite big, this low to this low is not as big, and then this low to this low, the distance is not as far at all. We start to see it slow down. While that is happening, the MACD will start to slow down, it'll start to head up. Okay, same thing over here, the RSI will start to print higher lows. It'll start producing a trend to the upside, kind of like this, okay, with clear high lows, high highs. I'm going to go find a chart where that's happened, or find a time frame where that's happened. So that will start to give us an indication that the sentiment is not as bearish. That is not a buy signal. I'm going to explain to you what I would be looking for. This is not financial advice. This is what I would be doing for myself, what I'll be looking for before I feel convinced that we have turned around. But here we don't have those signs yet. So there's some good news to this. I want you to take away that inflation causes market corrections and has always done that for 100 years. It has always done it. The only question that we really have now, and every time it happens, by the way, everybody thinks this time is different. Just Google this time is different. You'll see how many times it comes up in the 80s and 90s. Everybody thinks, we all think we're special, and this time it's different. It's safer to say that it isn't. We've had 20 of these types of corrections, if not more, over the years, over the decades, and so we always think it's different. What is different this time, though, is that, first of all, we don't have the kind of debt crisis that we had in 2007, 2009. I'm not saying we don't have problems. I'm saying we don't have the same problems. Okay, right now, as it speaks, if the market corrects now, pretty much everyone should be okay. Everyone should be kind of okay. There should be jobs out there. They should be paying okay. It's just that the cost of everything is a little bit too expensive. I don't disagree with that at all. If anything, if you ask me, I think everything's ridiculously overpriced. But I'm very kind of judgmental on that. But overall, it seems to me, even anecdotally, that most people seem to be able to find jobs, and they're getting paid relatively well. I don't ever think we really get paid as much as we should, but anyhow. So I need to see this. I need to see price slow down. Now it could be a double bottom. A double bottom generally would be two equal lows, but believe it or not, a slightly lower low or a slightly higher low, they are all the same. Okay, they would all qualify. And these two tools here are very, very reliable and very powerful in the following situations. And I'm going to go show you on a chart where we've seen it before. And I know some of you have already heard me say this from last week's webinar. Okay, so here's a double bottom. If that's what price is doing, if my MACD is coming down here, blah, 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 and then my MACD does a higher low like that. So I've got a higher low on the MACD and an equal low here. That is great, and that is almost certainly going to be the case. It's a very bullish sign. Okay, if next one up, if I have a drop and then a higher low like that, my MACD is probably going to be bullish anyway, so that doesn't really make a difference. And the final one being that if I have a drop and then a slightly lower drop like that, and my MACD has come down and started to go up like that as well, so my MACD is bullish, prices like this, those are fantastic signs of a very likely turnaround. Again, still not an entry signal, still not a buy signal, but is now, remember, I want like 5 things to convince me with confidence that the market is turning around. And so I need to see that. So could it happen where it is now, where price is now? Yeah, it could. It doesn't matter, because what I'm going to cover with you tonight is how you'll know with a high degree of confidence that we've started to turn up. So the first thing we need to do is look at previous highs. Here is a previous high, and the next one up after that is the previous high here. The weekly chart, ladies and gentlemen, is going to be your best time frame for confidence, because sometimes we get what's called the dead cat bounce, where you get a couple of days of the markets climbing and has a really bumper day like this. and then you think, okay, this is it, it's turning around, and then it subsequently goes down and creates a fresh low. So you need more time, and that's a good thing. The fact is that we can probably assume that the market is not anywhere near turning around just yet, which is good. It means that, you know, if I can get my paycheck at the end of the month and I have a bit of spare cash, I still have time to start looking for stocks that I might want to buy as an investment, for example. So you can see there's a level here that's quite significant. In terms of the much higher time frames, we've got levels in this area that are pretty significant. So I'm going to be looking for either a double bottom or even potentially a high low, but I want to see both indicators will be diverging if that is the indication we're going to get. In other words, if they're not both diverging, then it probably isn't the turning point. So that's the next thing I need to see, and possibly could even mean a double bottom before it turns around. So you get something like this where it slows down. And also then the next step is it's going to have to break a previous high. So when you go from a downtrend to an uptrend, one of the things you have to do as part of that is you have to break the previous high. You have to do that. So either the market comes straight up and breaks it, which is cool, and then it produces a high low and goes, or it produces a high low, high high and breaks it. Okay, but it like you need both an uptrend and a break of the previous high to get. That's two separate things that you must get to get that confirmation. So we don't have that yet. And keep in mind that this whole period here was in an uptrend until we got to here. Sorry, let me clean this up a bit. Until we got here, this was an uptrend, and then it shifted into a downtrend. But for most people, during this entire episode here, and that goes back a while to October last year, we've just been waiting for the market to do something, and eventually it just stopped going up and then started going down. So it's really only here we've started getting the breakdown to the downside. So again, there'll be the same thing when the market turns around. You will get a period of about 2-3 months where the market might be trying to slow down, call the accumulation, and then starting to trend up. But you don't, as far as I'm concerned, you can't really rest until you see that downtrend go into an uptrend. You'll need that. And so we'll need to see that. I want to see the bullish divergence, and then I want to see a break of the previous high, and then I want to see a higher low. And so I need all those things to happen, which will take time because it's got to happen on the weekly chart. So we're saying that even if it started to turn around now and turn around, we can reasonably probably expect it to last until October or November. So I'm just going to, you know, keep calm. As I said, the freakiest thing that could happen, which is I still don't really think would be a good thing, is it somehow just goes straight up like that. But it doesn't matter. It's got to break the previous high. So then when it does it, I'll reconsider it. The next thing that has to happen, please notice this. And again, I apologize for those of you who've heard me say it before. Notice that the price is above the 50 moving average, that red moving average. Okay, here it sort of drops below it and then it gets back up above it. We are below it at the moment. You can see price sort of bounced on the top and then kind of bounced and rejected is underneath. We need to see price get back over that 50. And usually what happens, I've never not seen it happen, usually the very moment that it gets above it is also the moment where we get that shift to the uptrend and a break of the high. That's where we get it. So it happens at around about the same time. So that, again, you'll be joining me in these webinars, so we'll know for sure when it's happening. We're just not seeing this right now. And as I said, again, I think it's likely that, not so convinced the market will turn where it is right now. I think there's a bit of a bounce off that. I'm thinking these levels probably are better options. But again, it doesn't matter because I'll know when I start to see those breaks. And we had a pull up and then a slow move down and a pull up and a fast move down. So the speed is picking up if anything else. And so it's just better for us, for me, I think also to just, it's one of those things where also from all the books I've ever read, and there are some incredible books on investing, incredible. And the classics are always the best. Value Investing by Benjamin Graham, I think, is Warren Buffett's university mentor, taught him everything he knows, and he was a fantastic investor as well. It's called Value Investing. And he, you know, some of the stuff has changed a bit, but most of it still holds. It was just common sense trading. And actually, one of the most amazing books, I really value it, is by a guy called One Up on Wall Street by Peter Lynch. Peter Lynch, One Up on Wall Street. And he just common sense stuff. And most of it means don't panic, but you never sell. You just never sell when the market's crashing. Just never do it. You just never, ever, just in case I wasn't clear on that, you never sell when the market's dropping. you either buy or you hold, but you never sell. And it's something that people do, but you never do it. Okay, so because the idea is the market will always ultimately recover. So we just take that monthly look at it. We can see that we can comfortably come back to that 50 moving average comfortably and still be within that. If we measure the Fibonacci retracement, oops, nicely done, Adam. The McFly. Okay, you want to play it like that? It's fine. We'll just go like this. Can I get this one, please? Let's just do this one. Let's just go there. Okay. And so we've just hit the 382 within that from the high to the low. We're good. We've got a 50 fib and a 618. We can still come back down here, and although it seems scary, we're still within a healthy trend, and we can get back up, you know, early mid next year. We'll see how that goes. We're still in the fear phase, so all the stuff you hear, by the way, is going to be very negative. And absolutely, at this point and at this point, the media, the sentiment is at its most pessimistic. This is a fact. It can be verified that the mood is always at its most pessimistic when the market turns. The market is not going to admit that it is, the media is not going to admit that the market is bullish until it's like back up above that 50 anyway. So I don't listen to the media on that. I'll know when I see it in the charts. I'll know that. Okay, the media will just mess with your head. There's just no point to it. Is there any particular reason why you're giving me this issue here? Okay, there we go. And so I want to be, let's just go and then compare this. If we go across and have a look at this and compare this to a few of the other ones. So we'll quickly look at some of the other charts, quickly go across, template, support, resistance. If you want to see how I can kind of shift that template thing, so I'm just going to go here and save this as the default. So I'll do that. Before I do that, I'll shift it to the daily and then quickly save that. Yeah, most of you probably know these things. I don't mean to, you know, preach anything that you already know and offend you, but yeah, I'll go with that. So let's have a look. So here's my, this is the S&P 500. Same thing again, back down to these levels. It's, you know, it's fine. The angle was really steep and the correction compensates for that. That's always what happens. If we have a more gentle angle, then the angle correction is not. So in other words, this tells you aggression. And the more aggressive the move is, the more the market overreaches and has to have a correction. And that's fine, that's normal. We'll go through to NASDAQ, to the tech stocks, and wait patiently for this. See how these levels goes. And tech stocks have taken quite a big hit. My opinion on that is that tech stocks have reached, there's always a period where the most popular stocks are getting to a point, especially the clues are, so you always hear these expressions of, well, you know, when you're trading financial advice from the shoeshine person, you know, that's when you know the market is in a bit of a bubble. And the same thing happens here as well with tech stocks. When you get to a point where someone's saying the valuation doesn't matter, the valuation of a company doesn't matter, then you know, okay, you've gone too far, because the valuation always matters. But you get to a period, certainly in the last 1 or 2 years, companies have been listed and valued, and they didn't even really have to deliver much, okay, because the hunger was there to kind of buy into stocks and new stuff. And so what we're seeing, especially because we're more technology based today, is we're seeing there was much more hunger into technology stocks. And by the way, cryptos are technology stocks. They are, when you think about it, they are digital currencies, but they are tied to technology. They're integrated into technology. They're birthed by technology. That's a weird term to use, but they are the product of that. And so they're also taking a hit by this kind of drop in it. So what's happening now is a lot of companies were perhaps overvalued, or just the desire has gone out of tech companies for now. As I've said before, we still use technology. We're not using it any less. And so that just explains it's been overvalued. It's coming back in line with kind of where the true value is here. So we can see if you use the 50 moving average as an example, you can use your own one. I'm just going to use this one because it visually works well. Gives me a sense of where that value likely is. I like to see these wicks starting to come in. That tells me the market's putting on the brakes if we see that. And I'm looking for a green candle. So again, for those of you who've heard me say this before, you know this. Pulls back, we get a nice little green candle, and that's usually the first proper attempt to do a move around, a turnaround. Big pullback, green candle, we start to take off. red candles come back, green candle, and we take off. And again, I'm looking for something here. So I think that the next green candle we get is going to be that real first ditch attempt to turn around. And that takes a whole month to form. So that tells me that unless this turns around the next 7 days, 8 days, it's probably going to be the earliest point at which I would expect a green candle might be August, well, July, and or August, July or August potentially to see the market do that. Okay, could the market come down further here? Yes, it could potentially do that. From a trader's perspective, what does that mean in terms of trading opportunities? Again, the market, I'm looking for clear, solid sell opportunities, but short term. So short term means that we're selling at these levels and looking for moves to the downside. Let's go back to this, for example. And also, I think we need to look at some of the other markets. Let's look at the DAX. So what matters? What's important about the DAX? Okay, I don't think this necessarily makes a difference, but let's just go through here and have a look at this. Do we think that this matters? And you usually have to restart it, but I don't think it does. Control O, not 1,000. Let's do 10,000. I don't really think that's going to be the case. But this is to do with the data that's available. We have a level that we can look at over here. So I'm just going to put that in. And for the most part, we've managed to stay above that level. The next kind of major level I'll be paying attention to, yes, is going to be at about this area. There's also something over here I want to be paying attention to. So I'm quite happy for this to kind of stay where it is roughly. You can see a strong bearish candle at the moment. The momentum is very bearish. And so looking to see how the market responds to that. Quite interesting. A little bit of a shape here. I want to see how the market reacts at these levels and does it potentially find some support. Here was a big drop down and a big push up. I want any kind of pattern like that is going to be particularly good for me. If we look at it on the daily basis as well, there's definitely some areas here that I want to be monitoring. So to kind of sum up where we are at this point in time, we're still bearish. We're still bearish, but we are approaching an area where the market could potentially start to slow down. And the weekly for me is a really good idea. So that means that if I'm shorting opportunities, if I'm looking for a trade and my trading style is looking for, here's a very nice legitimate setup. Is this rejection candle over here. So you've got a downtrend, prices come back up into a level of support resistance and produced a rejection candle over there, which is a failure to get through. So that's traditionally, it's a good traditional setup. Makes a lot of sense. So usually what would happen is I would enter 1 or 2 points below the low. That's a 1 point as a buffer and the spread. And the spread you can kind of see over here. So then I would add that to my stop loss above that high as well. So I usually look to do that. And that then represents my 1R. So what is 1R? 1R is whatever you wish it to be. 1% risk, 0.5% risk. I never exceed 1% risk, ever. That's my personal preference, just preference. I'm always at 0.5% or 0.25% per trade. It's okay. I do that, but there are some traders who go up to 2R, but I don't know anyone I've never heard of anyone who regularly risks 3R or more. They might add into those positions, build up, while some of their initial positions are in profit. But I don't think right out the gate they'd risk 3% per trade. That's a very tricky thing. And I'd have to have a high win rate, and this has a high win rate anyway, 60 to 80%. So I don't, anyway. Point is, I'd look for that, and then I'd be targeting 3 times that, so 3R, which is going to be, I'm doing it visually here by eye, but it's going to be somewhere around there. I'd be targeting that. And again, I'd have a 1-to-1 take profit. So somewhere around here, 1-to-1, I'd be taking off about half of my profit off the table, and then I'd probably trail my stop loss behind the everyday thing. You can see the reaction we've had during the past. I'd be very cautious when we approach this area, and then I'd be looking to potentially take some profit on that. So the higher time frame is telling me that we are entering an area where there is the possibility of a bit of a bounce in this area. Again, let's go and have a look at it on the UK one as well. The US markets are taking the biggest hit. If we look at the charts, they are having the biggest corrections. And part of that is because they've had the most growth. The US markets have had insane growth in comparison to the UK or the rest of the world. And so they're having a deeper correction. So you can see here we're at a relatively significant level, and that's a major level as well for us. So we could still find some support here. If what we call contagion, in other words, this kind of infection continues, we could see breaks below these, and then it gets relatively bad. But the US seems almost too calm that it's not really going to happen, and it may not. I definitely does not pay to be pessimistic. I don't mean about being realistic. I'm saying prepare for the worst, but hope for the best. Pessimistic to me is convinced the worst is definitely going to happen and prepare for the worst and forget about hoping for the best. So that's not really the case. Let's have a look at the ASX in Australia, see how that goes and see how that looks. And that's had some, some struggles here, but overall, again, it's not doing too badly. So this area is not an unreasonable area to find over the next 1 or 2 months that we get something similar to this happening. So that's 2-3 months where you turn around, and again, that becomes a swing low and a bullish candle. All these little things start to matter. Over time, in the beginning, your brain is just so bombarded by trying to learn so much stuff. But after a while, you realize, okay, I just need to know candlesticks, support resistance levels, anything on top of that that doesn't add confusion, Fibonacci levels, moving averages. Once you add that in, you start to realize that these are the magic little things, just the little candlestick behaviors here. Swing low, bullish candlestick off a major level, probably off a Fibonacci level as well. All of that becomes an indication the market is going to attempt a turnaround here. And so that's what I'll be looking for in this area as well. So it'll be a good sign if you start to see that happening in the UK and the German DAX, the German 40 at the same time as the US markets. They're going to be closely linked, at most a month behind, but not 6 months behind. I don't expect that. And so I expect that to be potentially the case. And we've spoken also before, by the way, about cryptos. So what would I be looking for, excuse me, on cryptos? And we spoke, we had a couple of webinars where, why do I feel like my data is missing here? What's going on? Yeah, there we go. So we got price kind of dropping below these levels. And this is very much tied to equities. I stand by that. There's a lot of evidence. So I will need to see a turnaround point here as well. It's trying to slow down. It's consolidating. It's trying to turn around. You can see you've got some slight trend line. Just trying to point out a couple of things here. So if I can do that, you've kind of got price desperately trying to turn around in these areas. Trying to do that while you've got here these low lows. So it's definitely, oops, what happened there? And yeah, we've still got those kinds of things. So I'm looking to see if we can but I don't expect it to change while the markets are still tanking. There just isn't enough evidence in my experience. And I've been trading, Bitcoin and everything since it sort of was listed. I don't expect too much of that to be changing. Let's have another quick look at something such as wheat. Let's go into wheat and just see how wheat is looking at the moment. So this is important because we're seeing a strong correction from wheat coming back down. We had a knee-jerk reaction. There was already some exhaustion in that area, so this is very important, and a strong rejection, and we're starting to come back down. If you have more data, you can see we're coming back into those moving averages. So this just means it's overpriced. What I like about this is it's showing again that the technicals make sense. I can't give you an explanation because I'm not interested in researching why wheat has hit a bit of a limit and why it's coming back down. But I can tell you that I would have expected it to come back down because it had become overpriced. And we can see if you look at things like the Russian ruble against the dollar, that also became sort of overpriced and came back down. And we can see similar things when we look at crude oil. So we go here to US crude oil, and there's also a really nice little tool to clean objects from a chart. You can just remove all the objects from a chart. But here you can see we've produced nice rejection over there. So I'm going to count that as a major rejection level, and we're likely to see oil come back down towards. Now, the furthest I would expect it to reasonably come back down to is this area, but this area also becomes feasible. Well, that's interesting. Just go through and do nope. I'm looking for something else here as well. Customize. Where is my, there we go. Okay, we don't have it. There we go. So I'm expecting price to come into this area over here. That's where I'm looking for price to do a bit of a correction down to this. It can then resume, so we might still find we're back up here by the end of the year, but I'm expecting a bit of a correction, especially if this month in a week's time closes near the lows of it. When a candle closes near the lows, to the downside or to the upside, like this, that is usually an indication that it is looking to continue in the next session. Okay, not always, but it's a good indication, especially when the true value of it is lying closer down to here where the moving averages are. All right, now, so we've looked at the indices. We can see what we're expecting to see, and right now the expectation is that they're going to continue to head lower. If we go back to the Dow here, for example, this is really the area I'm expected to target. I think it's fair to say that that this would be kind of, here's one area we potentially can look to change direction. And again, I'm going to just mark this little area over here and then go down to the weekly. So this, again, good area for it to potentially find a bounce. And so one of the things that could happen, again, this is what we do as traders, is we kind of talk about a narrative. We describe a scenario which we think is a reasonable scenario. And if price action unfolds that way, then we have a trading plan for it. If the market starts to not give us those signals, then it starts to tell us that the opposite is likely to happen. So either way, the market is going to give us an explanation. So if it closes a bullish candle here, we might find that price, because there's a level here, price could continue down from here, or it can reconnect up to there, but I think it is very likely again to come down. So I think we might see a boost in the shorter term and a longer term, and then then I want to see that turn around. And that's trying to be optimistic. I'm trying to do what would be the fastest way the market could recover, and then what would be a potentially a longer period version of that. I just don't expect anything over the next, I think it's more likely a 3 to 8 week kind of scenario where that will start to become clear. And so on a daily basis, that means just being cautious, expecting price to potentially come back up to these levels, a contested even back up to here, and then looking for those short-term moves to the downside. At the moment, it does look as though it is quite keen on attempting to push a little bit higher. Look at the 4 hour here. So here we've got this very nice bullish divergence on these indicators. Oops, let's go back to that, please. We've got lower lows here, and it's starting to trend up here. So on a smaller scale, we're seeing this happen. We're seeing that happen. That's happening on the 4 hour because the daily is needing to do a bit of a correction before it carries on down. So this is what I'm looking to see. Can price break up? And if it breaks up here, it starts to head up to this level. And if that is the case, because that's what it's trying to do, then that means the daily will start to either turn where it is here and go down, or come back up towards this level. And that is something I'm looking to see in the shorter term. I'm looking to see that daily ideally do a bit of a move up here, then maybe do a double bottom and then carry on if that's what it's going to be doing. And you have to kind of take it a week at a time. How did the market fare this week? Are we seeing enough evidence to convince me that it's really turning around? Remember, this is going to be a major level. Once we break back up above that, that could be one of those 5 things I need to see before we're there, or even a higher low. So any of those are indications. We're just not there yet. So what I should be doing is looking more for bearish signals. So it pays, because I don't expect this to turn around anytime soon, is looking for bearish signals to short it until eventually it is very clear that there's more bullish signals here and less bearish signals here, but we're just not there yet. So what that means is my plan for now, remain bearish, cautiously bearish, until I start to see definite signs of price starting to struggle with support and starting to climb high. And it's not a quick thing, guys, just to sum up, it's not a quick thing. This is something that takes, is expected reasonably to take a couple of weeks to start to form that base. And it's at its most dangerous when it's at the bottom, because then it kind of chops like this before it finally starts to pick up, if we're gonna see that. Major highs get broken. I'm looking to see that convincing. So and again, the 4 hour gives you massive clues to that. If that 4 hour starts trending in a very nice bullish fashion, then we've got signs that this moves to the upside. Then we've got to see how it handles this level, because it could shoot up in the most bullish fashion you've ever seen, straight up there, and you think, okay, this has got to be it, and then it just gets there, runs out of steam, wobbles a bit, and then it just comes back down. So that's why I've given you that weekly, daily, and 4 hourly view, and the monthly, to identify those key levels and to talk about what must happen. And I'd be surprised if it can't turn around in just a few days. It's got to take a few weeks, because it's taken months for us to get here. It needs a bit of time to turn around. Okay, any last questions before we wrap up? Anything else you want me to have a look at? We're gonna look at the fangs. So let's go through here and just bring out those symbols very quickly, but this is giving you the basis for that. So if we go and have a look at, let's say we go through and look at Apple. we've got Apple. We'll bring in Google, which is Alphabet. Okay, so that's Alphabet. We've got Amazon. Okay, Netflix. I want to throw in Microsoft as a fantastic one as well. Microsoft. There we go. Amazon, FANG, Google, Facebook, Meta. This one. Why does that look weird? Okay, but that's Facebook, right? There we go. No. Okay, it's Meta. There we go. Cool. So let's go through and have a look at these quickly. So we'll start off with Facebook, which is Meta, which is this one. At monthly chart, you can see that big drop down. Let's try to see if these levels hold. If not, it's going to come down to these next ones over here. I think that's just bad data. So again, we saw it, tried to put on the brakes and then just failed, couldn't quite do it. But here, look at this. This is interesting. See the acceleration? See that sort of here, then tried to hold, then it drops down and it's trying to slow down here. It's trying to do that. Okay, and it will try and do this several times until it actually does manage to turn around. Okay, I can see your questions. I'll deal with those in a second. Let's just have a quick look at, let's look at Amazon to get a sense of that. Questions. May I ask how you would take profit of 50% of the gains? Is that a function of MetaTrader? Okay, out of topic, what books will you suggest to read about economics? So, okay, we'll talk about that one. And how long did it take you to learn all this and become profitable? So, okay, those are, I want to answer the questions because that's really good. So I'm going to start with the last one. I want to put it into two answers. The first one is, how long do I think it could have taken me to become profitable if I had done the right things sooner, if I'd come across the right techniques sooner. So first of all, I paid a lot of money for education in 2010, which just gave me a lot of information, but not a lot of, it didn't make sense for me to tie it all together. 2-3 years later, I was then exposed to Trade with Precision. I was a client of theirs before, so this is again still, 2013. And then they were the same techniques. It was price action, support resistance levels, moving averages, but their stuff made sense to me. They built a case up to take the trade, the same way I'm showing you guys now. And that made sense to me. Meanwhile, on the psychological side, I had a bit of a fear about making money, like almost like I didn't deserve to do it. So there was definitely a self-worth issue, and most people have that. And also I was messing around. I would trade really well and then start messing around because I'm like, oh, I can always just make the money later. But the problem is then that becomes the cycle. You make money, mess around, give it back, make money, mess around, give it back. And so you just waste time. So that's also a psychological issue. So those things, once I resolve those, I've been consistently profitable. Do I think if I'd been sitting next to a trader and they would have said to me, what are you doing? I think they would have fixed that stuff a lot sooner. So I think that if I'd been in exactly, and this is obviously not the case for anyone, but if I'd been in exactly the right place, I would have said a year or two, I would have been consistently profitable, but also psychologically mature. And so this is what I'm trying to spare you that pain as well. So that it is possible to start to get consistent results within, say, 6 months of using the same strategy and trading the right market conditions. But there's other aspects, how you deal with that emotionally. So I know I can see your question. Thank you. There's actually 2 people have asked me how to take some of the profits off the table. We'll talk about that in a second. So that's important. Otherwise, you basically end up spending a lot of time kind of messing around before you settle down. What I can say is that complexity is not the solution. Simplicity is. Trading well is about doing the basic things really well. Support resistance levels, identify the market conditions, stay away from it if it's choppy, if it's trending, look to trade it, take profits consistently, not this trailing stop stuff like that's investing. Trading is about target 3 to 1, take the money, bank it. That's your paycheck for the day. Once you get into those things as habits, your account starts to grow because you're actually taking money out the market and putting it in your account. There's a whole, we could talk about forever. Okay, the next question was, how do you take half the profits off the table? So one of the ways in which you can do that is 2 orders. So you would go terminal, you would place 2 orders of 0.5% each, one with a 1-to-1 target. Okay, so 2 orders, split your risk into it. There's your entry, there's your stop loss. One has a 1-to-1 target and the other has a 3-to-1 target. Okay, that's 2 separate orders. I use a tool which I've spoken about in the past, but you can look it up. Okay, it is called, bear with me, where is it? It's my Navigator. So here, I use a tool, position size calculator. Okay, when you use this, it's free, it's on there. Looks a bit complicated here, but you can set it up as a fixed 3-to-1 target. You can set it up to give me 0.5% profit, for example, or sorry, 0.5% risk at 3-to-1. You can set it up. There is an option when you go through it to the indicators. You can go through to this one, position, and there is actually an option here, believe it or not, to do. Where did I see it? Just give me a second. Now this is worth your while. We'll run over by 2 minutes, but it's worth your while. There's an option here, for example, at the bottom. Here, script take profits number. You do 2 like that, and then all of a sudden you get this option here, take profit 2. And so you can have it set up as a 1-to-1, and then literally when you just type in your, you can see the lines here. You can see there's my take profit, there's my entry. If I do it as a pending thing, there's my entry, and you can adjust certain things, and you can adjust your stop loss. All of that is kind of taken care of. Entry is my stop loss. Take profit 1, you know, kind of, there's a thing here. Anyway, and you can adjust the lines. It's a bit hard to see in this thing. And then you just literally execute. There's a script down here. You just drag it and drop it, places the orders on your thing, and you're good to go. You can get in real time, or you can get in pending orders, and it will just do it for you. So just have a look at it. It's not too complicated to learn how to do, and it's a great tool. Okay. Good. Yes, I need to do that as a separate session or on my YouTube channel. I can do it on my YouTube channel. I haven't been asked to do it yet. Okay, so listen, it was a major step for me to install NT5 and get it up for you guys. So, just for today. So, but I'll try and do something on it on YouTube. It's actually a great idea. Thank you. Okay, other questions quickly. Out of topic, what books would you suggest to read about economics? So for trading, that won't help. It's a good question, but for trading, you need to learn price action and certain things. And so the one I recommended for most people, which I'm going to get, which I'm going to bring up here for you and provide it. The link, Walter Peters, is this one book. I'm just going to get this for you quickly, and I'll give you a link. But in terms of economics, I actually honestly I can't. But one of the other things that I would suggest. So here's a link. Let's just do that. Here's a link for the book. Which books? I'm going to do that. Send to everyone. Is this one here. So it's just a great book for price action, support resistance, powerful. It's got some strategies. It's really good. Like, it is one of the best basic books I've ever come across. There's other books I would recommend, and I'll bring it in a future webinar. I'll just show you 4 or 5 books. And then in terms of traditional stock trading, just bear with me, is value investing. So let me just bring this up so that I mentioned it earlier. Value investing by Benjamin, Intelligent Investor, Intelligent Investor, which, if you want it, is this one. This is Benjamin Graham, works really well, and you can do that one as well. So this would be the books. I am wrapping up, by the way, just so you know. Okay, send to all. That one is also very good. This will teach you more about economics and money moving, and it's Warren Buffett. It's like as good as it gets. Warren Buffett, man, it's all a mess. And as an audiobook, you can listen to it as an audiobook as well. Let me have a look at the other things. I do offer mentoring. I mean, this is not something I solicit but if you get in touch with me on my YouTube channel, or just send me an email, I'll sort you out today. Would it be possible to session on the steps needed to go from an unprofitable to profitable? I need to do that outside here because I haven't been asked to do that. So I need to do it as a separate thing. You guys have my email address. If you just remind me of those, send me an email asking me what you'd like to do, and then I'll ask IC Markets if I can do a topic on it. So and I'll ask them what I can do on that one. Sorry, it's Adam@Trade with Precision, and then I'll ask them if I can do that, if they're okay with me doing it. The other questions are, that's a good one, thank you. Yeah, excellent session, cool. And so that answers, I think that's it. I think it answers all of those things. And so no, it's not a functional MetaTrader, unfortunately. So yeah, and so just having a look at some of these, by the way, just going through some of these markets here, they're the same, and they're good indicators of it. Like Microsoft as a stock for me is incredibly I'm just going to get rid of that. You can see it really has immense stable growth. Had a correction here and a correction here, and this was COVID, I think. So stable throughout that and coming back in. So here's what I do. Just last thing I'm going to say, last 30 seconds. The strongest stocks will have the earliest signs of a recovery. That's like, so even though this is a big correction, this has gone almost parabolic. So the strongest ones will have an earlier sign of a correction, so I keep an eye on those. The weakest stocks, when you think about it, obviously are not going to recover until the last bit because they were always weak. And so I like to short weak stocks and buy the strong ones rather, because shorting a strong stock is a bit suicidal. It's like trying to take on, trying to take on the strongest fighters in a hand-to-hand combat. It doesn't make sense to do that. So again, looking at this behavior, we look at it on a weekly basis. There we go. So potential, slightly lower low, but looking at it on a daily basis, I bet you've got it trying to come up and break these. It's trying. So I keep an eye on those. I think Microsoft is a better one to keep an eye on those one. Netflix's technology is struggling. Amazon, Google, they're not really showing. I mean, Google as well. How does that look from a weekly perspective? Oh, so that's interesting. It's got a higher low. So again, it's got a higher low. You've got that bullish divergence here because that was already from there trending up. Interesting, and a potential higher low here on that weekly. So that's, remember what we're talking about. It has to still get over the 50. So it could find some struggle here. We'll see. So again, those ones are great ones to keep an eye on. Google, Microsoft, of the FANG. I really like those combined with that. But they are very strong in comparison, and Apple compared to like Netflix is just tanking. Okay, guys, and look at that potential double bottom there. We'll see. So it's always a pleasure. I know I love the hunger. Please bring it, and I will do my absolute best to give you the best quality, most useful information that's actually practical. As I said, if you go find my YouTube channel, you can see real trading happening, and so all this is being applied on a real account. So just to give you a sense of, it's not a myth. You can do this. It's a learnable thing, but you got to cut loose of a lot of junk, which we all carry with us. All of us carry with us. I've never met anyone who couldn't learn how to do this. We all have the same problems: doubts, fears, self-confidence, intimidation. We have all those same things. But some people, everybody's demon is a little bit bigger, so you've got to work through all of them. Cool. I actually don't do options, but I think options trading is a fantastic way to earn money. Interesting enough, the amount of concentration options requires from me at this time is too much a distraction from my trading. But in principle, I keep saying to myself, at some point, I'm going to be doing options trading as well. If I had a team of traders, then I would have other people, I could do my analysis, let everybody else trade it, but I'm doing algos at the same time now. I'm doing both manual trading and algo trading. Great question. So I feel like I'm just bombarding everyone. Listen, if you've got any questions, I don't want to burn your time. I don't want anyone to be unhappy with me that we ran over, but please, any questions to do with your accounts or stuff specifically with IC markets, please send it through to the lovely folks on that address, because I'll be more than happy to help you. As I said, you can find me on YouTube as well. It's just free stuff. It reinforces everything we're covering here. And I learned everything that I do. Ultimately, I got it from Trade with Precision. And that's why I'm carrying it through here, because to me, that's the stuff that I always find. But I've got to separate fundamental thinking from what I hear in the news, from what I see in the charts. And that's what I'm trying to demonstrate to all of you on a regular basis, is trust what the charts are telling you. If you ever have to choose between what you're hearing in the news and what the charts are telling you, the chart's always right. Always go with the charts at least. So, ladies and gents, thank you very much for your time. I appreciate it. The YouTube channel is this one here. It's this one here, Adam Harris. Just look for that if you want to do it. Just Adam Harris, London City Trader. You'll find it there, and just subscribe. Just to see more of this stuff. And then I'll tell you what, I'll check with IC Markets. If they're not interested in doing any of those things, I'll just do one on YouTube for everyone, okay? But I just want to make sure that they're okay with it. I don't want to step on any toes. Ladies and gents, thank you so much. I'm going to let you go now. Please enjoy the rest of the evening. Yeah, just keep an eye on those price levels for the euro dollar. That dollar is really trying to break through that level. And if it does, we're going to see some big moves. Weaker euro, weaker pound, weaker stock market. But if the dollar takes a bit of a breather, we're going to see a bounce in the market, and we're going to see a stronger euro, pound, and Aussie as well. Okay. Thank you, ladies and gents. I appreciate it. Thanks very much, Leon. Thank you.